I'm John Miniotis. I'm the president and CEO of Abra Silver, and I'm definitely very excited to walk you through why Abra has emerged as one of the top tier silver gold exploration companies globally. Please note, of course, there's going to be some forward-looking statements as part of my presentation here. Now, Abra Silver's key asset is called the Dbos project. It's quite a high-grade, large-scale project with a well-established resource, but importantly, that resource is rapidly growing here. So currently, within the indicated category, so the M&I category, we have about 80 million ounces of silver, 730,000 ounces of gold. So on a silver equivalent basis, it's about 140 million or so ounces. Now, importantly, these ounces are located close to surface, open pittable, high grade, and so high margin ounces. And so this is quite a highly economic project already. And like I mentioned, I mean, our objective here is to continue to expand it and prove that this is truly a very unique asset. Now, back in 2018, there was a preliminary economic study completed on this project using only $20 silver, $1,300 gold. You can see this project at those conservative commodity price assumptions has over 30% after-tax rate of return. And so this is a project that's not on the sidelines waiting for much higher commodity prices before moving ahead. This is a project that even under pretty conservative or bearish price outlook, this is still a very high quality, high margin project. And so it's quite de-risked from that standpoint. Now, of course, at current commodity prices, this project has over a 50% rate of return and over $730 million net present value. And again, that's based on the 2018 study, which we're now updating. So myself and my team, we joined the company. We became management of this company back in January 2020. So we've been running this for almost exactly a year and a half now. Throughout that time, we've been focused on exploring and unlocking additional potential here. And our exploration team has just done a phenomenal job delivering on that front. So you can see here on this slide, we've intersected several high-grade silver intercepts, including over 100 meters of above 500 grams per ton on a silver equivalent basis. Also intersected some very high-grade gold intercepts. And again, these are within oxides, open pittable, close to surface, so high margin ounces. And now all the drilling historically has really been focused on the oxide zone here, which is located within the first 200, 250 meters from surface. But we've, for the first time, extended some of the holes deeper beneath the oxides into the sulfides, and have also got some excellent copper and gold intercepts in the sulfide mineralization as well, which we're going to follow up at a later date. And we'll talk more about the exploration program in more detail shortly here. But overall, I'd say the story's come a long way. We're fully funded. So as of today, we have over $20 million of cash in the bank. And importantly, I mean, we're still trading at a deep discount to the actual net asset value of this project. And we'll talk about that shortly as well. Looking at the share structure here, you can see based on, I guess, a 66-cent share price, the market cap is about 290 million or so. I believe yesterday we were maybe about $260 million market cap, $20 million in cash. So the enterprise value as of today is actually under 250 million. You can see we've also, over the year to date, had some excellent liquidity on the Venture Exchange, which is a primary exchange where we trade. We've traded on average over 2.5 million shares per day. And so that's really opened up our investor base here. Whereas a year and a half ago, this was primarily a retail story with very little institutional investors. Fast forward to today, and you can see on the right-hand side there of the slide, we currently have over 20% of our shares held by institutional shareholders. Of course, our largest shareholder is Eric Sprott. He led our last two financings last year. He became the largest shareholder. We also have SSR Mining as a very important shareholder. They previously owned this asset, sold it to Abra back in 2018, and continue to maintain their equity interest. And so, yeah, we're very pleased. We have a very strong, supportive shareholder base. You can see, of course, the share price has done quite well. But we still have a lot of catching up to do. So where we were trading at a year and a half ago when we took over, I mean, we had roughly a $15 million market cap. Of course, at today's prices, as I mentioned, the net asset value of this project is over 700 million Canadian. And so the share price has been playing catch up, but still, in my opinion, nowhere near reflects the actual underlying value of this project. So we've come a long way from a very low base, but we can continue to see blue sky ahead of us here as we continue to deliver and unlock value here. Just briefly on the management team. So we're an extremely lean, focused management team. That's the way we like it. So low G&A, most of the cash is going in the ground where it's adding value, not on paying salaries here. So there's 4 of us in management in total. And so there's myself and our CFO based out of Toronto. Just to give you a quick sense of my background, I've been in the mining industry now for 17 years. On the corporate development and capital markets side of the business. So I spent over 6 years at Lundin Mining, where as part of the corporate development team there. We really transformed that company while I was there. So we acquired the Candelaria mine from Freeport, the Eagle mine from Rio Tinto. Also helped out with the Tenke sales process. So really helped Lundin transform. And those acquisitions have fared very well for that company. Then I left to join a spinoff called Orico Metals. That was a spinoff when Orico Gold merged with Alamos. They spun off Orico Metals. I joined there as a VP corporate development. In about a year and a half or less than 2 years, we grew that company, sold it to Centerra for $300 million in cash. So that was a great win for shareholders. I then went to run a company called Aethon Minerals, which was a spinoff of Altius, merged Aethon with Abra. And have been running Abra with my team here for about a year and a half now. So really focused on unlocking shareholder value through corporate development, acquisitions, etc. Running the technical side of the business. We have our chief geologist, Dave O'Connor, extremely experienced. We actually took him out of retirement to join the company. He's run a number of companies throughout his career and knows this project extremely well. On the technical side, we have Dave and his team, and they've delivered, exceptional performance for us this year. And then also a very strong board. I'd point out that as well. That's very important. A number of investment banking, sort of corporate development experience on our board, as well as on the local side, Hernan Zabaya, one of the top mining lawyers in all of Argentina. We're extremely pleased he's on our board. And so, overall, a very strong team that's focused on executing, I'd say. Now, importantly, Dbos is located in the Salta province of Argentina. And so for those who may not be as familiar with the landscape in Argentina, Argentina is quite like, I guess, the US in some respects, given that in Argentina, it's the provinces that own the mineral rights. Of course, in the States, it's each individual state. So you have provinces like Salta, which is extremely mining friendly, very open to mining. And then you have other jurisdictions where it's much, much, much harder to actually advance projects and get your permits. So you deal with each province in terms of permitting. And so we like to say Salta is essentially the Nevada of Argentina. And you can see that here. So Salta has had significant capital invested in the province and continues to be attracting foreign capital. So just last year, Fortuna Silver completed construction of Lindero. That's, of course, about 100 or so kilometers to the west of us in the Salta province. They spent $320 million US, bringing that up into production. First Quantum spent about $500 million. Quantum Taca Taca, that's a multi-billion-dollar project, of course, in Salta. That's one of the mega copper projects out there, really. Then we also have one of our neighbors, POSCO, is spending now $450 million, ramping up a lithium operation. And there's a variety of others, of course, as well as us included, looking at exploration. And so Salta really welcomes mining with open arms. One of the key benefits of being in Argentina is that once you have a feasibility study in place, you can actually sign a stability agreement, which locks in the tax rates, the royalty rates for a period of 30 years. And so that's extremely important, especially now with the tendency to be on higher tax rates, higher royalty rates out in the future. it'd be, a major asset, having your tax rates, your royalty rates locked in for 30 years. And then, of course, that helps welcome investment. So we're very pleased to be in Salta. I won't go over this slide in too much detail. I'm sure everyone on this webinar here has their own views in terms of commodity prices. I mean, we're very bullish on silver, the silver outlook here longer term. We feel where we're at right now is in the very early innings of the next major bull market. And importantly, we think there's a clear lack of supply of primary silver projects, especially high quality ones, like in the lowest cash quartile. So Diablillos is very well positioned to take advantage of much higher silver prices. As we're working towards a construction decision here, which we expect can be made in 2023, with full production likely coming on sometime by the end of 2024. So we feel as silver markets, silver prices continue to increase going forward, bringing Diablillos into production could be very well timed to take advantage of these higher prices. Now, looking at the quality of this project, so currently the resource base is about 60% silver, 40% gold, current commodity prices. So very good breakdown of both those precious metals. Now, if you look at this from a gold equivalent perspective, you can see the current grades are about 2.1 grams per ton. Again, this is in oxides, open pittable. And so as you benchmark that to other gold projects, clearly, you can see this stands out very favorably with those grades. But we, again, expect these grades are likely going to increase with all the exploration that we've undertaken here. And we'll talk about that shortly. But we're starting off with a great base, but expect the quality of this project is only increasing going forward. And you can see here, in terms of the silver intercepts that we've intersected, these are for all of this year and all of 2020, some of the top silver intercepts globally. And so this is on a gram thickness basis. So you take the silver grades times your meters, and you can see the intervals here. So we have, I guess, 4 of the top 30 or 32 drill intercepts. But importantly, this is only on a silver basis. And Diablillos stands out as having very high gold grades as well. So some of these holes, for instance, so that hole you can see there, the third best silver intercept was, also had about 2 grams or just under 2 grams of gold as well. And so on a silver equivalent basis, that really helps move that up as well. And so this is very highly economic ounces that we've been intersecting here over broad thicknesses. And we think that's going to have a significant impact to economics as we're coming out with mineable zones here, very high grade intercepts. And again, this is close to surface, open pittable. And so that's a point worth noting as well. Diablillos ranks as one of the few projects on this list that's open pittable. So we're actually comparing our open pittable grades to underground grades. And of course, typically underground grades tend to be higher than most open pittable projects. But here we are with Diablillos faring quite well, even despite that comparison. And so we think this is a very high quality project, and we're proving that consistently as we continue to come out with more drill results here of this nature. Looking at the project in more detail, I mentioned there was a PA study done back in 2018. We're actually just updating that as we speak, and we expect to have the updated PA study announced next quarter in Q3. But the 2018 study showed a 6,000 ton per day carbon in leach plant. So we'll be producing silver and gold doré, good recoveries here on both those commodities. Be producing about 10 million ounces a year on a silver equivalent basis. So pretty good scale project for sure. We mentioned the economics and mentioned we'll be coming out with an update here shortly. So we've been drilling for the last year and a half. Starting in January 2020, we've been drilling. We've completed now what we call the phase 1 drill program. That was 15,000 meters. We're just waiting on the final few holes to get those back from the lab. And then we're going to work on the updated resource estimate based on all this drilling. And then come out with the updated resource, followed by a PA study based on the economics. So we think that's a key catalyst for us, and that's now just right around the corner. That's going to be in Q3. Looking at the valuation of this project again, you can see the 2018 PA study using conservative commodity prices. I mentioned 30% rate of return on a Canadian value. The NPV, net present value, is about 337 million Canadian. So if you divide that by our number of shares out, that's 77 cents per share. And so we're now trading at 60 cents. So we're trading at a steep discount to the value of this project. If you assume silver and gold is going back to $20 and $1,300 gold, and if you ignore all the success we've had over the last year and a half, so you just take the existing resource, this project's worth 77 cents per share on that basis, and we're trading at a discount to that. So it's pretty unique, I'd say, risk-reward profile from these levels. When you look at current commodity prices, though, so you keep that existing resource base, you keep the mine plan from the 2018 study, but just change commodity prices, you can see the value of this project over a 50% rate of return. This is a project worth 729 million Canadian, $1.66 per share. And again, we're trading at 60 cents. So despite coming a long way, so a year and a half ago, we were trading at 5 or 6 cents. And that's because the previous management team had run out of cash. This was essentially a shell company with a very high quality project. We've clearly, re-rated since then. I mean, we're now showing this is a very unique project with all the exploration results that we've been delivering on a consistent basis. But despite all that, we're not even still trading at the PA study. So the share price has come a long way, but it's been playing catch up to the value here of the project, and we still think we're significantly undervalued. Now, of course, this is, again, based on the 2018 study, the 2018 resource. And so you can see, as part of the next few slides here, the types of intercepts that we've been intersecting. So you can see the average, so 27 million tons, pretty much all within the indicated category here. Good grades between silver and gold. And then you can see on a silver equivalent basis, it's about 150 grams silver or 2.1 grams gold. Again, within oxides, that's considered very high grade. But have a look at the intercepts we've been coming out with on a consistent basis. And so you can see on that far right-hand side, that column there, you can see the gold equivalent intercepts we've been coming out with, clearly much higher than 2 grams gold equivalent. So in most cases, I mean, multiples of the existing resource grades. And importantly, look at the interval column here, because, we're not just highlighting we drill a 500-meter hole and we highlight, well, we got 1 meter of 4 grams. I mean, in many cases, it's 104 meters intercept, so 5 grams gold equivalent. And then there's another hole there, 103 meters of over 6 grams gold equivalent. I mean, this is bulk mineable zones, and very well mineralized, very high grade across pretty exceptional thicknesses. This is pretty unique, I'd say, in comparison to most primary silver projects out there. And then, of course, this is, again, mostly all within oxides, but you can see we've intersected some very high grades within the deeper sulfide potential as well. We haven't even focused on that yet. So we'll come around to doing some deeper drilling, likely later this year, focus on the sulfides. But for now, it's just unlocking value from the low-hanging fruit here, close to surface, within oxides. We've been intersecting excellent grades over incredible thicknesses on a consistent basis. And so that gives us a lot of confidence, knowing that the updated resource estimate is right around the corner. You can see with multiple holes like this, and this is just a small segment. I mean, if you click on this link, or if you go to our homepage, we've summarized every single drill hole that we've announced here over the last year and a half. And I believe it's 90% of the drill holes have had high grade intercepts. This is obviously a small segment of those, but you can see this is not, this is quite representative of what we've consistently been coming out with. So we think there's clear evidence that this, project is increasing in quality and increasing in size going forward. We're not just looking to expand this by adding some lower grade material. We're looking to expand the tons and the grades and the recoveries and a number of other factors as well. So this is becoming a much more valuable project here. Now, just quickly, in terms of the phase 1 drill results, so I mentioned we've completed now 15,000 meters, focused within the Oculto zone, which is the main zone here. And there was multiple targets, and I think we went 3 for 3 on really defining higher grade mineralization on each of these targets. So initially, the focus was on expanding that deeper gold zone. You can see there circled number 1. So sitting at the base of the open pit within oxides, we intersected several holes of very high grade gold intercepts. Again, going back to the last slide, you saw there was 10 grams, 15 grams, 20 grams of gold in some cases, sitting at a level of about 250 meters from surface. So we feel we've extended the Oculto mineralization down deeper within oxides. But as we were drilling these, the deeper gold targets, we consistently were intersecting very high grade gold intercepts close to surface. So within the first 50 meters or so from surface. And so you can see that oval shape there, number 2. And so then we started intersecting these high grade hits and said, look, let's systematically drill this out. This was material that was previously classified as waste in the 2018 PA study. And we were intersecting 1, 2, 3 grams of gold within the first 50 meters from surface. And so we then undertook a drill program with 25-meter centers, drilled several holes per line. And we believe we'll be announcing here a shallow gold resource in material that was previously classified as waste, now looking to have a gold resource there sitting within the first 50 meters or so. So this is material that will go to the mill likely within the first year here of operations. So it can significantly increase the upfront economics here, which is highly valuable. And then also we've looked to expand this pit out towards the northeast. So some very exciting holes there that we've announced outside of the pit shell. And now that's the focus of our phase 2 drill program, which we'll talk about shortly. So we're going to continue drilling there. We see lots of potential to expand outside of the proposed pit shell towards that northeast zone. And then the Tesoro zone is really an infill section here. This was included as part of the resource, but we feel the grades were quite significantly underestimated. And if you recall back on that silver slide where we showed we had 4 of the top 32 intercepts, they all came from this Tesoro zone, which is the treasure zone. And so we've been, we still have 5 more holes to announce from this Tesoro zone, but we feel with the pretty spectacular drill results here, we've got over excellent thicknesses. Again, this is going to be the most economic part of the project here. This is a high grade zone and really stands out globally as one of the higher grade silver and gold zones open pitable within oxides here. So you can see also there's been gold intercepts close to surface there. There's a zone of high grade gold out towards the northeast. And then you can see sort of some high grade silver and high grade silver equivalent intercepts. Again, that's silver and gold. So this is a highly economic zone here. And we're continuing to infill drill this and really, putting that together for the updated resource statement. Now, all that's been the phase 1 program, which is now behind us. Like I said, we're still waiting on 5 more holes from the lab, which we expect here shortly within the next few weeks. And then all of that basis is going to be for the phase 1 drill program, the updated resource. But we've already started the phase 2 drill program. So we're now drilling several other zones outside of Oculto. So again, we're going to have the updated resource pretty much only on the Oculto zone. But now we're drilling out to the northeast. We're drilling a zone 500 meters to the north called Laderas, and then a zone out about 3-4 kilometers away called the Northern Arc. And these other zones again represent excellent potential here. Potentially we can have some satellite deposits here, all feeding a central plant. But the valuation of the 2018 study was based only on Oculto. And again, we're not even trading at the value that was shown in the 2018 study, let alone the increased value, which we think Oculto represents. And then you get these other zones basically for free. You're not paying that for any of that in the current share price. And our goal is to deliver on the exploration results here throughout the remainder of this year. So we'll continue to have excellent news flow coming up for the remainder of this year as we start announcing the results from these other zones outside of Oculto. Now, importantly, where we sit, I mean, we're surrounded by lithium operations around us in pretty much every direction. So there's excellent infrastructure already in place. You drive up to site year-round. So we've been drilling 12 months continuously. There's a natural gas pipeline within 35 kilometers from our site. There's going to be an airstrip now as part of POSCO's project nearby as well. We're doing some water well testing. We believe there's sufficient water here, and we'll be proving that out shortly. That'll be included as part of the PA study. And so we see very low permitting risk. I mean, there's really nothing going on here. There's no alternative land use, and this is in a mining area. So, you know, the local communities, which are about 100 kilometers away, are very familiar with lithium mining. And so, you know, we'll be moving this forward. We expect to have full permits in hand, likely by in less than 2 years' time here. So by early 2023, we expect this project's actually going to be a construction-ready project with a construction decision to be made. And so, you know, this is truly a pretty unique project, quite advanced stage, but we're continuing to drill and expand this in parallel. Now, just talking about the milestones ahead. Of course, we've completed the phase 1 drill program. We'll be coming out with the updated resource estimate and the updated economics next quarter. Of course, we're drilling now the phase 2 program, so we'll continue to have ongoing news flow every few weeks coming out from that. And then by the end of this year, we see this project as likely being ready to move into a full feasibility study stage. And so that's going to be our focus for 2022, is advancing this into a full feasibility study. And again, with that goal of having a construction-ready project by early 2023 with full permits in place. So we've actually already commenced the permitting process. That's well underway with the baseline work we're undertaking here. And so, you know, a lot of exciting catalysts here, and this company is truly rapidly emerging here from being a shell about a year and a half ago to having a full project that's going to be construction ready in less than 2 years from now. So we're extremely busy, but extremely excited with all the catalysts right around the corner. Now, in addition to Diablilos, we also have some earlier stage projects, which we feel can also be quite significant and add significant shareholder value down the road. So we own 100% of a large land package down in Chile. So this is about 50,000 hectares of land located close to El Abra in the heart of the Antofagasta copper belt. So this is a copper gold there's multiple porphyry targets on this large land package. So we own 100% of this project outright. We brought in Rio Tinto as a partner, and they expect to commence drilling shortly here. Unfortunately, they've been delayed due to COVID, but you know, any moment now, we expect they could start drilling here, and then they have the right to earn up to 75% interest in Arcus by spending $25 million in exploration. So they'll be funding this program on their own. And of course, we're looking forward to them ideally making a large-scale Rio Tinto type discovery, and then we'd keep a 25% interest in that. And then on the Argentinian side of the border, last year we picked up another similar stage project. We feel this is a project ultimately that's going to be attractive to majors. Again, we have an option to own 100% of this outright. It's located in the heart of the sort of Andean copper gold belt. So we're located close to Los Azules, which is a billion-ton project, close to Los Pelambres. Filo Mining, which has recently had one of the best copper results likely in the last decade or so, is also located in San Juan. That's, I believe, further to the north of us. But this project has had excellent intercepts historically as well. So it was formerly owned by Teck. It's changed hands a few times. We picked it up from a private owner. But yeah, you can see there's been over 40 meters of well over 1% copper with excellent gold grades. So we expect to be drilling this ourselves by the end of the year. So right now we're targeting around October when the field season opens up. We'll likely undertake an initial 2,000, 3,000 meter program And assuming we get excellent results, hopefully from La Coipita and Arcus, both these projects could represent sort of a spin-off opportunity. So we then have sort of a copper pipeline, copper gold sort of earlier stage pipeline, and then we can spin that off to shareholders or look to add value in other ways as we remain focused on, of course, Diablilos, which is for sure the flagship property here. So that's really it. That's sort of a key summary, I think. Maybe I'll open it up to questions, and then I can summarize this at the end if that works. So please feel free to ask any questions you have. So yeah, maybe Mark, I'll turn it over to you.
Terrific, John. Thank you. Very in-depth, lots of details to digest. Appreciate the openness and quite an impressive operation. We do have quite a number of questions that are lining up, so we'll get right to it. One question asks as follows: when do you expect production from Dbos to commence?
Yeah, so I mentioned we'll likely have a production decision by early 2023. And so production could commence ramping up in 2024, sort of later in 2024. So there was an 18-month construction timeline in the previous PA study, and we expect that will likely remain the same. Okay. So we're about 3 years away from actually having a project that's ramping up into production here. Okay, lots of time for good planning at that point. We have a question here that asks more a general question in Argentina. How is the inflation rate in Argentina? Yeah. So the inflation rate continues to be high. I think it's about 30% or so a year. Now, what we do, of course, and I think what most companies do, is we hold our currency, of course, in Canadian and US dollars, and then bring money into the country as needed. So the costs in local pesos are definitely increasing, but the exchange rate continues to fall. And so it's been an offset for us. And in fact, the way we're bringing money into the country, we're taking advantage of a system that's in place where you can sort of bring money in at sort of the unofficial exchange rate, and you get a premium for US dollars. Okay. And so if you look back at our Q4 financial results, you'll see like a gain of $2 million. And that was really an FX gain. So where we brought in money and got $2 million benefit from the sort of falling FX rates that we were able to take advantage of. So from our cost perspective, like on a Canadian or US dollar basis, our drill program has come in significantly under budget, to be honest. And so despite rising local costs in local currencies, we've been benefiting. And so our drill program came in under $4 million for all of that phase 1 drill program. That cost us $4 million US, or actually less than 4 million. Great, thank you for that, John. To stay in the question realm of the weather, the climate in Argentina, business-wise, what is your opinion regarding Argentina wanting foreign companies to buy and use local and not import? Sure. Yeah, and I think that's the case anywhere in most jurisdictions. I mean, and so luckily where we're at in Salta, there's a number of suppliers because there's definitely a strong lithium presence there. Of course, Fortuna having built Lindero as well. Now there's some experience there as well. So we're using local sort of drill contractors. So all of that is contracted out, but it's still a local company, like within Salta province, as well as we hire from the local communities. So there's a community about 100 kilometers away called Pasos Grandes, and we employ as many people from the local communities as we can. But there's a lot of talent, so there's no reason not to. And so we're quite fortunate from that perspective that there's a lot of experience within Salta and also in the neighboring Catamarca province as well. So yeah, most of the employees at site are within the surrounding regions of the mine site. Great, thank you for that. Curious, when will a resource update which incorporates phase 2 additional drilling be available? Yeah, no, great question. So of course, now we're working on the phase 1 resource update. So we've been drilling for a year and a half, and that, all of that drilling is going to be added to the old resource, and then we'll come out with the updated resource estimate in Q3, so sometime next quarter. But in the meantime, of course, we've now commenced that phase 2 drill program, and we expect that'll last for the remainder of this year. And so with that drilling, we'll likely have another updated resource coming out next year. Okay. So this resource continues to grow. I mean, by no means will this be the final resource, the one that we come out with, but it's, the next step forward. And then we continue to drill. And again, we've only been focused on the oxides here. So down the road, we can do some deeper drilling, and then there could be a sulfide resource. But there's lots of room for growth here, and we're just taking one step at a time. But phase 2 drilling will likely be concluded with a resource next year.
Okay, thank you for that, John. Great segue here. There's a question about oxide. Is there an oxide sulfide transition yet at Dbos, and is it a primary oxide deposit?
Correct. Yeah. So there is a transition zone here. I'm not sure which would be the best chart here, but you can see. So basically, there's these feeder zones, and the mineralization comes up these steeply dipping breccia zones, and then there's I'm not sure if you can see my there's like an unconformity horizon, sort of down about 250 meters or so.
Yes.
But in some cases, we've extended the oxide zone down to over 300 meters downhole, and so it varies, but definitely primary oxides closer to surface, and then there's a transition zone, and then it gets down into the primary sulfides for sure. Okay. And then based on this, there's something feeding that, so there's likely a porphyry down deeper at depth. We haven't even scratched the surface on that yet. So we've been drilling the primary oxide zone through the transition zone and into the sulfides. There's likely a driver down deeper here somewhere, and we'll follow that up again, likely sometime over the next 12 months here.
Okay, thank you. Still a great number of questions coming in. Let's move from the resource and technical section and move over to the finances here, John. Question comes in, how much cash reserve do you have?
Over $20 million Canadian as of today. So the cash balance has actually increased. So at year end, we had 17 million. Today, 6 months later, we have over 20. And so there's been quite a large number of warrants outstanding that are in the money. And as those warrants come in, that's more than funded sort of all of our exploration efforts. So we're actually, that's an important point, because we're fully funded all the way to a construction decision, which again will be in 2023. So we're funded for the next year and a half, 2 years here, just based on that $20 million of cash. So we're using that cash conservatively, but at the same time, moving things forward as quickly as we can.
Wonderful. And speaking of investment, a great question here. Not a lot of companies can talk about this. What do you think attracted Eric Sprott on becoming your largest shareholder last year?
Yeah, no, great question. So for those who know Eric, I mean, of course, he's very keen on silver. So he sees strong silver prices glowing, but I'd say for us, it's a variety of factors. Having already a large silver resource base and gold certainly de-risks the project. So this is not sort of a silver exploration company where we're trying to define an initial resource. We already have a large resource, 140 million ounces of silver in place. We've already proven it's quite economic as is, but then of course the exploration upside. And so as the drill results have continuously been proving here, there's high potential to add value here, and that's what we've been focused on doing. So we're growing the resource base. This is already very high quality ounces. We're actually in the lowest cash quartile. So in the PA study, the cash costs were estimated at $7.50 an ounce on a silver equivalent basis.
Yes.
About $28 silver. I mean, we have exceptional margins. And then, of course, we're growing that. And so good scale here in a mining friendly jurisdiction. So I think there was a variety of factors, but overall, I mean, you're getting an undervalued company here with exceptional upside potential at very good valuation levels. And so I think that remains the case today as well.
Great. Thank you very much. There may be a bit of crossover here, but let's stick with the share price here, John. Your share price is up over 1,000% over the past year. What do you think the key drivers have been for that success?
Yeah, no, so I think it's really a matter of the share price kind of playing catch up to the actual value of this project. Okay. So I mentioned on that slide, I mean, currently with the current commodity prices, this project based on the 2018 study has a value of $730 million. A year and a half ago, we were a $15 million market cap company. So we've come a long way, but even where we sit today, I mean, we're a $260 million market cap. I mean, it's nowhere near the value of this project. And so our price, is playing catch up. It's up 1,000%. That's great. But looking forward, I mean, it's, what's the value of this project? Compare that to our current share price, and there's still a very large disconnect. And we see that disconnect. I mean, the value of this project is, almost certainly at this stage, likely going to increase as we come out with the updated resource, updated PA study. So we're adding value to the project. That value is increasing. The share price is sort of catching up, but not really. So there's still a large disconnect, and so we still see a significant re-rating potential here for us as the market just continues to realize the true underlying value of Diablilos here.
Oh, fair enough. Thank you for that. And at Backstage, we spoke very briefly about the status of COVID, the pandemic, and how various countries are coming through. Many are much more open than others, the difference between the US and Canada. Obviously, operations in Argentina, they've had quite a journey, unfortunately, with COVID. I'm curious to know your thoughts, please, on how COVID has affected productivity.
Yeah. So we're extremely fortunate, given that our chief geologist, Dave O'Connor, lives in Salta. Okay. And so, moving within the province has not been any issues at all. And so he drives up to site whenever needed. We test everyone before going up to site. So of course, you have to pass the protocols that we have in place. So all the workers that come in get tested. Once those tests are, of course, negative, they can go up to site. They stay there for 2 weeks, and they actually get tested as well on the way down. So we have not had, knock on wood, any issues whatsoever with any of our staff. So, actually last year was the busiest year of all time at site. So we drilled more meters than really ever before, despite COVID. So COVID hasn't not slowed us down. I mean, of course, flying to Argentina, anywhere internationally, has been a no-go. So I haven't been able to get down to site. And, we haven't had any international travels going down to site. But for the local team, it continues to be business as usual. And they've been actually extremely productive despite COVID. So we're very, very pretty fortunate, I'd say.
I'm glad to hear that. Absolutely. A great opportunity here. I'm curious, when you come across people that are simply investigating precious metals, how do you speak from your perspective, John, on silver itself versus other metals in terms of investment and the opportunities?
Yeah, no, so we honestly feel it's likely we have the perfect storm emerging here for the silver price outlook. So what's important to note is that silver demand is clearly increasing here. I think that's undeniable. If you try to go buy a silver bar or silver coin, you'll see the incredible premiums. Premiums are likely at all-time highs here, and it's sort of so silver as an investment, the demand has significantly increased. Also from the sort of industrial side of things, silver is used in a multitude of applications. So of course, solar panels, electric vehicles, all of these are, driving the demand higher for silver, which is a great conductor of light and electricity. And so, the demand for silver is increasing, but at the same time, primary supply is decreasing. And so, the silver supply peaked, I forget when it was, 2015, 2016, and has been falling for the last several years here. And when you look at the scarcity of development primary silver projects as well, that sticks out. I mean, these projects take years to come on stream. So you can see 3 years out how many primary silver projects are going to come on stream. Diablilos sits as one of the very few, I'd say, especially at this quality. But one of the very few primary silver projects that can come online within the next, say, 3 to 4 years, especially at this scale of 10 million ounces a year, silver equivalent basis. So there's a clear sort of deficit, I'd say, continuing to emerge here. As the demand of silver rises, supply continues to fall, and there's very few projects of this scale and this quality that can really come on stream and really help narrow that gap. So we feel higher silver prices are likely on the horizon, but importantly for us too, I mean, Diablilos is economic at $20 silver. For us, of course, we'd like much higher silver prices. Everyone in the industry, of course, that's what we're rooting for. Right. But this project's going ahead regardless, I'd say. I mean, even at $16 silver, we have excellent IRR. So, this is a project that's moving forward, but yeah, could benefit tremendously from much higher prices.
Beautiful. Thank you for that, John. Just as we wind down, we often try to give our audience a bit of a comfort break, grab a coffee, that sort of thing between sessions. But I always like to offer an open door here. If we've not touched on something, anything else that comes to mind to share for our audience from your perspective?
No, thanks, Mark. No, I think that was a great overview, and certainly welcome. If there's any other questions, please feel free from your audience members. Feel free to reach out to me directly. But yeah, no, hopefully, I mean, I think the summary was, I'm quite excited here. Hopefully that came through. We have a lot of catalysts on the horizon. This is truly a pretty unique primary silver gold project that's been expanding, high margin ounces. And we're moving this project forward, and we're fully financed to achieve that. So our focus here is just on delivering, and that's what we'll look to do here for the upcoming quarters and years ahead.
I appreciate that. A really in-depth presentation. Thank you for all the insights to the questions for our audience, John, and we'll be watching the company very closely moving forward. We look forward to talking to you again.
Sounds great.